Welcome to the 56th Wook in Review. We're going to get started here by reading a disclaimer. Wook Capital Management, Inc. and its employees solely provide investment advisory services to family clients and do not provide investment advisory services to the general public. Furthermore, investments are highly speculative in nature and involve substantial risk of loss. We encourage investors to obtain advice from your professional investment advisor and to make independent investigations before acting on information that we publish. We cannot assure you that the information is accurate or complete. We do not in any way warrant or guarantee the success of any action you take in reliance on our statements or recommendations. Past performance is not necessarily indicative of future results. All investment decisions of an individual remain the specific responsibility of that individual.
All right, so I've got my screen share in the Stages channel of the Discord server, if anybody wants to follow along. As I was saying before I pressed record, the newsletter has a lot of tech-related content. I'm going to basically skip that until anyone joins the room who has anything insightful to add. I do not have anything insightful to add to the Meta, Alphabet, Microsoft, all that jazz.
Yeah, it just seemed a little
it is
inappropriate to
It's the biggest
ignore it. It
earnings
was the
week of the
biggest
year,
market
and
move of the
everybody's
week.
got earnings.
I could present a few of them if you'd like. Let's see.
Yeah, feel free.
I'll start
If you
with
want
the
to
Meta
start
story.
that way.
So Meta, Google, and Meta, Alphabet, and Microsoft all reported earnings this week, and Meta actually, exceeded all expectations. Zuckerberg stated it was a very good quarter for the company, in his opinion, but the stock still dropped because the CFO warned of weakening advertiser demand in quarter four. So while this quarter the company did well, they're expecting that weak advertising demand is going to be lessened the upcoming quarter. So the stock dropped by about 4.6% the morning after the report came out. So that's how Meta fared. Google didn't do so hot either. Their stock fell over 9% because they fell short of analyst expectations for cloud revenue. So you look at cloud revenue as a proxy for the company's AI potential, and people are really much more enthusiastic about Microsoft because Microsoft's cloud's been growing, and people think cloud is one of these aspects that's going to directly show how a company's going to perform once AI starts taking over because of the large computing power needed, right? So Microsoft's earnings went much better. Stock shot up quite a bit, up 4% on Tuesday after it beat the expectations all across the board on every aspect. So yeah, Microsoft's market cap soared by about 73 billion and Google's fell about 170 billion. And when you're dealing with a company this big, I mean, shares falling 9%, that's huge. And to think these companies fall short of expectations by just a tiny percent, and then you see market caps fall $170 billion. It's quite crazy. And then next story, I just covered a little bit of the SBF trial. There's been more going on since the newsletter came out post the publication of the newsletter. So I'll see if I can pin something in the nest, because there are some interesting quotes I saw retweeted on Zero Hedge, and I'm going to try to pin those. But I don't know if, Rod, you have any thoughts on SBF trial?
I think he should rot in prison.
I think that's a pretty
I've
fair
thought
take.
he should rot in prison for a long time, like most of the scammers in crypto. I only hope that they are found guilty and serve the most intense possible punishment for the crimes. Hopefully we'll see CZ in court soon before wearing his orange jumpsuit. Maybe him and SBF can become buddies in the same jails.
When he founded his investing arm of the business, he admitted to having absolutely no idea how crypto worked, but thought there might be really, really large arbitrage opportunities available. And there's been a lot of pictures that have come out over the past few weeks that show all of his coworkers kind of mocking him for never actually getting any work done. Another thing that was funny to note He claimed that his hair and his lousy wardrobe was not some like intentional look to make investors think he's some boy wonder. He told the court that he's just lazy, which is a remarkable thing to tell a court.
Yeah, I haven't followed it that closely. I've just seen some headlines about it. It sounds like, I mean, this guy is just so fucking deluded. His interactions in the courtroom, opting to take the stand and then the way, like, just lock the fucking guy up, throw away the key. Menaces to society, these scammers. That's how I really feel about it. But Zerp addled a lot of brains, and we're continuing through this indigestion in the market with rates, being what is abnormal for some short timers, but returning to normal if you're an old timer or long timer. So I still get a sense when I listen in on the different spaces on this platform and across kind of the way that a lot of younger investors still think going back to ZERP is going to happen and that it's normal and that it should be expected. And it kind of terrifies me when I look at all of the overvalued technology companies they've all piled into. So, yeah, well, I mean, like you said, people are obviously making bets on the big cloud players. And I think it just comes down to a matter of valuation. Good graphic that I saw. Where the hell did I put it? It was from. I know who sent it. It came from John Author's column last night. If I can. There we go. Okay, I'm just going to go to my Gmail. So, yeah, this graphic here that I'm sharing, which I saw it on Twitter, Joe, so I'm not sure if you'll be able to find it and pin it, but it was what he lifted from Bernstein, and it was just showing a graph of, on the x-axis, you've got the 10-year bond yield, so left-hand side starting at 0, right-hand side all the way up to 6. On the y-axis, you've got the S&P 500 12-month forward PE, and the scatter plot has dots all over the place. If you create a best fit line, as you would expect, the S&P forward PE drops as the 10-year yield rises. But they took a slice and dice of the all-in S&P, showing us with 10-year yields just around 10%, not 10%, 5%. At 19 times forward earnings is an aberration. And then it broke out the Mag 7, which shows 28 times, just incredible. And then the rest of the market, so when they say rest of the market, I assume they're saying S&P less Mag 7, not actually like Wilshire 5000. So the rest of the S&P, the 493 is at 16 times, but they make the point that based on where yields are, the forward PE should sit sub 15. It should sit, 14.8 is where the line shows. So it's still implicitly 10, I guess, for rest of market, 10% overvalued, but then really you need to still look at the all-in S&P, so it's saying a lot more than 10% overvalued. And it was interesting to watch the market this week, today, into the afternoon. Just there is no appetite out there for things that are not, like, people are not rushing to buy small caps. They are rushing to sell them still. IWM, again, it's not the best proxy for all small caps. There's so much shit goes in there, but even S&P 600, that index now year to date is down 6 at the close today, now 7.5. So, a lot of these companies, I keep making this point, like, if there's going to if there's not going to be a nasty recession, a lot of these small and mid cap companies are just obscenely priced. They're just very inexpensive. Now, on the contrary to that, if there's going to be a nasty recession, then it just makes no sense at all that these, uber top heavy companies are trading close to 30 times earnings, and that the all-in index is trading close to 20 times earnings, forward earnings, with the context of the risk-free rate, being where it is, and longer-term borrowings being where they are. So, we're getting definitely this continued sell-off out of the summer. I think it's healthy. It's good. It's uncomfortable if you're invested in the equities that keep getting cheaper, but it is what it is. I did want to talk for a few minutes about, it wasn't in there, but I'll talk about Altria and their earnings. There was a few, I think, interesting points. I think most people know I find the nicotine space kind of a good pool of value right now. But what Altria, the problem is, when they call it out, and they've been calling it out, it's not new, but the problem is the illicit sale of the flavored nicotine products from your Elf bars of the world and whatever, insert Chinese, import here. They made the point that, let me pull up Librarian Capital. His note this morning had a couple of data points on it. Shoot. Let me pull it over here. So again, I'm sharing my screen if you're in Discord. Obviously, if you're not, I'm trying not to speak to a screen. But yeah, so the issue is FDA enforcement, really. Like you have all these illicit imports coming to the market that don't have pre-market tobacco authorization that are basically now stealing share. They sized it at between 1.5% and 2.5% impact incrementally to the volume declines that they're seeing in their core cigarette business. When we talk about Altria, obviously we're talking about the Philip Morris brand in the United States. We're talking about Marlboro cigarettes. So the volume, the issue for them is that they're losing more cigarette volume at a more rapid clip because of the proliferation of these illicit flavored e-cigs. Generally, if you eliminate the illegal products, you would see some reversion back to cig or to the other legal reduced risk products. But that's really the problem that Altria is facing. That's why they sold off so much off earnings this week. The idea that they're always facing the volume declines. The volume declines in cigarette sales is not new. They're kind of seeing, though, an acceleration of the volume decline because of the illicit products in the market, which is not good for anyone. It's not good for shareholders of the companies. It's not good for public health because you're just getting more people addicted to these flavored vaping products. But yeah, you only get 2 updates a year out of British American. You got Philip Morris International that gave their update last week, and then you got Altria that gave their update this week. So it's not looking good. But I guess the question is, given where the equities trade, I kind of think it's awfully priced in. But yeah, that's going on in the tobacco space. So some really, really nasty underperformance. I mean, I've heard people talk about the GLP-1 impacts on people's addictions to alcohol and tobacco. I mean, it just feels very overdone to me. In the context of is the typical tobacco user paying thousands of dollars out of pocket for a weight loss drug? I don't know that there's much data to support that, but I will say, look, really important not to ignore the reality of the herd mentality here going into the last 2 months of the year. If something is down a lot, there are rational reasons to realize a tax loss for a market participant. So I know I keep wanting to buy more of some of these companies, but I'm like, you reach your hand out and you grab it and pull it back, because it just, you get that sense that this market is really just waiting to absolutely roll over and die. The fake bull market, all the people who got really hyped up earlier in the year, when their shitco's rallied into February, and then the kind of continuation through the summer post banking crisis. We're finally starting to see some air come out of the balloon, and there's still a lot more to come for a lot of companies. And the pendulum usually swings back too far. It usually doesn't stop at the median. If things got way too rich, they usually end up getting too poorly valued. They usually don't just stop at what's fair. So I think there's a lot of interesting stuff. I think people are going to have good buying opportunities for the next couple of months. Again, who's to say that there is not a meaningful decline in the economy's activity next year? It's not going to keep growing at this fiscal deficit fueled rate that it's been growing at. But again, your duration should matter. I mean, if it's a trade, it's different. But if you're talking about, hey, I want to buy a chunk of this business and hold it in my retirement account for 5+ years, I think there's a lot of interesting stuff out there right now. So that's my diatribe. A lot of folks I see that joined who I appreciate hearing their perspectives. If anybody wants to request to speak, I'm not going to call you out and pull you up here. But yeah, obviously there's the kind of razor's edge we're here on is what is the next step here in the Middle East in terms of escalation. Does it become a broader conflagration? Does it get resolved through some back channels between those who are trying to see the release of the hostages from Hamas? I don't know the answers there, but VIX stayed pretty juicy all week. It's still juicy, ended in today at over 21. But even then, we really still have not seen an event, this year, but for the banking crisis that was nipped in the bud really sends shockwaves of fear into markets. And it does, when I say razor's edge, it feels like if you get an escalation, you're going to get a lot of people just heading for the exits, and we'll see what happens here into year end. But D-Bone, you came up. Did you want to chime in?
I was just waiting for you to say my name.
Okay.
So, I've been looking at some of these individual, clothing brands. A couple of them, just wanted to get your opinion on. So you got Vera Bradley, you got Victoria's Secret, Under Armour. These are, Vera Bradley's up pretty big off the bottom over the last, say, 6 months. But it looks like, and look, I don't think it's a great strategy to try to pick bottoms. But if you look at Under Armour and Victoria's Secret, those are two names that are basing out, while a lot of these other clothing names are really fucking bullish. They don't even see what's going on in the broader market right now. And I'm just wondering if, maybe if some of these other brands might be setting up for maybe some bullish trends in the next, maybe 6 months to a year.
I don't really think that the apparel consumer is that healthy right now, so I wouldn't expect anything to materially improve their near-term outlooks. Victoria's Secret has a slew of problems of its own. One of the problems is when your EBITDA begins to decline and you're levered. I have on. Let me get my face out of the way. But I have on my screen. You can see there. Trailing 12-month EBITDA has been in decline since peaking out in 21.
Who is this?
And it's actually
Which one?
Victoria's Secret, and it's at almost half the peak right now. So their leverage continues to rise because their EBITDA continues to decline, right? Even if that denominator is flat, since that numerator keeps going the wrong way, or vice versa. Like that brand has has its own perception issues, and the lingerie space has gotten very competitive, and it's as investors in another luxury lingerie brand owned business, I don't feel very great about valuations near term for the apparel businesses.
Oh, that's weird, man, because so many of them just have been fucking knocking it out the park. It's weird. I don't know. I just, aside from
Which apparel businesses have been knocking it out of the park?
for the past 6 months, like Gap, American Eagle, Abercrombie. I'm just saying from if you're looking at the share price, not from a fundamental standpoint.
Oh, see, that's the opposite of what I look at. I look at the business, and I don't really usually look at the share price, but I hear you.
Yeah. I don't know, man. Just from looking at it from a general standpoint, I think every time I've ever walked past the Victoria's Secret, I don't think that there's been one time that I've walked past one that hasn't been busy. So I don't know the fundamentals of whatever that industry you want to claim it is. I don't know if they have good margins or if it's a bad margin business, whatever. But if you're just looking at price, it's definitely basing out. And, no matter what's going on with the fundamentals, it's going to come into price at some point. And all of the information isn't priced in at once because participants aren't going to place all their bets all at once in markets. And sometimes that takes time to play out. So I think you have to pay attention to price more than maybe you're giving it credit. So I don't know. I do know what.
I mean, I think you need to pay attention to price if you're looking to trade, absolutely. But if you're ignoring the fundamentals and have no familiarity with what actually is happening in the business, then you're going to get sloshed around by price signals that may or may not mean anything.
Yeah, but that's why you have to have stops. So people have strategies where either their bet's going to work out or they get stopped out and they move on to the next. Have you looked at Adidas? Adidas has come off the bottom for the past it's been in an uptrend for the past 3 years. I don't know if you've ever taken a look at that.
Not very bullish on Adidas right now. No, I think they have a lot of. They've got to get through their Yeezy overhang. I think a bit.
But see, to me,
I would pick the winner. I would pick Nike. I wouldn't pick Adidas.
Right.
I think Adidas is kind of faltering.
Yeah. Well, I see it like this. You got McDonald's, you got all these brands that have been around and probably will continue to be around for the next 100 years. And the ones that I guess are investor favorites, they have all been, massively overpriced. You got Coke and McDonald's, and you could go through all these fucking names that just have recently had big, big sell-offs. And I don't know if there was any fundamentals to it. Maybe they were overpriced, whatever. There's different things that people say. But you also have these other brands, clothing brands, that they're going to be around for the next 100 years as well. And they've been fucking destroyed. And
yeah, brands usually aren't worth as much as you might think, though, especially in an environment where a lot of brands are going to fail, and entities will likely
American
be able to
Eagle's not going to fail, dude.
In either Chapter 11 or
no, American Eagle's not going to fail.
Restructuring.
No, American Eagle's not going to fail.
Okay, my point was that levered brands that are seeing underlying business deterioration are fucked.
Wait, you're saying that clothing brands have underlying?
For a long time.
Look, I've heard you say this brick and mortar shit. That applies to Macy's, dude. That doesn't apply to fucking American Eagle.
Yeah, so let's look at Adidas. So
it doesn't apply to American Eagle.
It has grown meaningfully.
You know what? What's funny is your ideas around brick and mortar are bullish for individual.
Of debt to EBITDA. Hang on. So let's talk about Adidas. Let's go one thing at a time.
Hold on. Let me say this.
So Adidas.
Hold on. Rod, just let me say this. Your ideas around brick and mortars like Macy's and stuff are actually bullish for individual clothing brands like Abercrombie, American Eagle.
My ideas around brick and
You hate
mortar
brick
like
and mortar.
Macy's? I
It's
think
okay to hate Macy's, but that Macy's
I actually don't.
Oh, you like
But
you
you're
like the brick
completely
and mortar
putting
that's
words in my
actually going to
mouth
go
now.
bankrupt. Let me get this right.
When have I said Macy's is going bankrupt?
I've heard you say over and over again that the brick and mortar business model is a failing model. So I'm assuming you're talking about Macy's,
I
Nordstrom.
have not said over and over again that the brick and mortar. Yeah, I'm removing you. I'm sorry. This isn't productive. Um, sorry. That's just entertain that, but there's only so far I can entertain it.
You did
Dirk,
well,
hey
sir.
man.
Hey, buddy. I've got a. You did well there. You lasted longer than I would have, but you managed that well. You managed that well. I've got about 35 minutes before I have to go. My wife reappears, so. Oh, pardon. Yeah, just I, as you're not going to call up everyone, I see Alina's finally stepped up. I've previously stepped up. I'm going to call out Ben to step up, and then we can get into the nitty gritty because
I'm gonna press that invite to speak. Forcing them.
Exactly. You don't have to shame them out loud. You just force them in the back channels to come up. Yeah, no, look, I think we were having a discussion earlier around escalation. I had about 20% spillover. Ben has 99% spillover. And I think that's really interesting. Obviously, let's try and make sure the crazies don't come up because this is going to inflame a lot of people. I'm coming at this.
That you're talking about the events between the October 7th
Hamas
atrocity
and
the retaliation,
absolutely.
That to spill over more broadly in the Middle East.
Exactly. So the atrocity that was committed by Hamas on Israeli civilians, and now Israel's response. And then what I'm now talking about is the potential for a further response from, say, the Arab world, right? I guess. I'm so, I apologize to anyone who gets upset with my sweeping generalizations. I don't mean any insult. It's just it's a horrible situation that, quite frankly, I wish never happened, right? But saying that, it has happened. So what I'm concerned about is right now in Europe, you have an incredibly balanced gas system. I think personally, and I put some stuff out on my profile on this to just help navigate people. November the 2nd is going to be super interesting because that is when the legal mandates for storage disappear. There is a second legal mandate on the other side of winter. So I think it's like 60% or something by Feb or March. I can't remember exact things, but essentially the 90% by November the 1st will be passed. Obviously, we all see the statistics that are pumped around Twitter, and everyone who's just everybody claims they're a gas expert is putting that shit out. What's super interesting is the reason why we haven't collapsed yet is because, in my opinion, of this regulation, of this law. So November the 2nd, once that law disappears, you could see an absolute fire sale in gas.
So Dirk, I'm not familiar with the law. You're saying there's a mandate in EU countries to maintain a certain amount of gas, natural gas storage?
Yeah, exactly. So after the invasion of Ukraine, the EU last year put in place a law that mandated that we need to be 90% full of all storages going into November the 1st. Right? That is the law. If you do not comply with that as a operator of a storage site, you'll be liable for all kinds of fines. So every storage operator is incentivized to make sure that those storage levels stay where they are. Granted, we're now at 97% in some regions, 98% in others. I discount anyone who anyone who's listening to this who doesn't know about anything about Eurogas. Anyone who starts quoting Spanish or Portuguese gas storage, just literally block them. They literally are talking shit. Portuguese and Spanish gas storage is a completely different system. There is one pipeline, two pipelines under the Pyrenees that account for like 25 MTM. It is a nothing burger. And to put that in perspective, the UK has 2 pipes which can generate 100 MCMs each into Europe, right? And so it's just when people quote that, Spain and Portugal are closer. Anyway, that's just a pet peeve I have, and I saw it posted today. So yeah, there is a legal requirement, 90% storage by November the 1st. It explains a lot of the reasons why the spot market, not the forward market, is strong. So the forward market is strong because of the spot market. The spot market has nothing, absolutely nothing to do with geopolitical machinations. This is the market that clears tomorrow, right? So unless, you know, Hamas decides to sink a fucking carrier in Milford Haven in Wales, it means nothing, right? It is literally, this is the spot of spot markets. I posted on my profile as well, EEX spot market gas. This is the day ahead and weekend ahead markets. This is real physical. And what's been fascinating is over the last few weeks, is that has been strong, really fucking strong. And that's got nothing to do with geopolitics, it's got nothing to do with macro. This is micro to the point of, you know, this is delivery tomorrow, right? So you can machinate all you want about macro stuff, but you're going to take X hundred million cubic meters of gas tomorrow. You're not going to be quoting, you know, Hamas in Israel, right? You're literally going to be burning this in houses and power plants. So what's been fascinating is that has been strong. And the only rational explanation I can give to this is the operators. So the operators are individual or companies that control the storages, and they are basically portfolio playing their sites. They cannot allow the spot market of gas to liquidate. But why they cannot allow that is very simple. A certain set of LNG terminals across Europe, so the Brugge, Isle of Grain, Foss, Dunkirk, the huge LNG terminals, they have the ability to reload LNG out of. So what happens when you bring your LNG alongside, you discharge the LNG onto an associated storage on land, and then that storage unit then regasifies it and sends it into the grid. Up until that regasification point, it's still in LNG form. It's still liquid. So it can be reloaded. And that's the bit that everyone in this market seems to have forgotten, is that it can be reloaded. I posted again on my profile, the live slots. You can go to those websites. You can actually monitor what's being bid on right now in those terminals. So you can validate, or well, you can't really discredit what I'm saying. It's all there. So you can validate for yourself. There you go. But what's super interesting is we could have on November the 2nd a liquidation moment where the gas spot price, the operators who cannot allow their storages to go below 90, and if they let spot liquidate, you can see LNG being reloaded and sent out. So they can't allow that to occur. On November the 2nd, you can allow that to occur. And this is where it gets fucking mad, because 10% chance that you see reloads. I think it's a 90% chance we see liquidation in the spot market. 10% chance you see reloads. If I was Trafigura, I would be reloading, because it's a great mercantile trade to do. Because at the same time, you start buying calls. Because the minute someone saw, and the EU government, so the Council of Europe, saw LNG carriers being reloaded with European LNG, well, the headlines write themselves, right? And the politicians would freak out because they don't understand what they're doing. And you can have a real whipsaw action. But this kind of goes back to full circles where we started this conversation, is that we had a conversation earlier with Ben, who thinks that, I'm not saying he's wrong at all, I just want to know more about it, is there's a 99% chance that this spills over into a wider Middle East conflict. And if that's the case, then then Qatar LNG is your likely target, right? And then you can see, so kind of high-level summary, if you're too long, didn't read, next week, November the 2nd, sell-off. By week 3 of November, it's going to rip everyone in the face. But there you go. Sorry. Over to you, Rod. Sorry. I feel like...
So before I go to Illini, Dirk, the trade is to load a shit ton of short-dated puts and then dump them into calls and make a lot of money.
Yeah. That's 100% the trade, and I can see already my mates at Trafigura. I don't know. I might actually call them next week on Monday. I have a sneaky suspicion. If I was them, they're the most nimble out of the lot. So Gunvor is the largest portfolio. Vitol is a little bit slower. Trappy is ruthless. And I know the guys there. I know the guys at all of them. But I'm going to give them a call. I honestly think that's exactly what's going to happen. You're going to have a horrible sell-off and then a rip into your face. But if this Middle East conflict actually does spill over into other borders, then I honestly, I just look at Qatar, right? Even if Qatar decides to continue to send shit, one well-placed missile out of Yemen onto an LNG carrier is a fucking disaster, right? That's 180,000 tons of methane liquefied. That's a bomb like you've never seen one. It makes a crude oil carrier look like chump change.
Oh, delightful. Love the positivity here this afternoon. Illini.
Hey, Rod. Hey,
Do
Turk.
you want to chime in on this or on something
Happy
else?
Friday. I'll chime in on it. I want to sort of press Dirk a little bit on his thinking on Qatar LNG. I mean, I'm looking at this. I think the situation, it does have echoes of the aughts or maybe the 70s. Certainly in the equities market and some of the long-term thematics playing out. But in commodities, I think in order to get a rally, you have to have a very in oil certainly, and arguably in energy, you need to have a really detailed and specific catalyst. And what I'm seeing right now is, I mean, I don't think you've got two different actors involved in this, as well as potentially other players too. Let's start with Iran. Iran so far has kind of been making, at least the Arab states have been kind of making peace and papering things over with Iran. Certainly Saudi Arabia, the Qataris, have never really been friends with some of the, Abraham Accord states like the UAE and the Saudis. And so I don't necessarily think that Iran is going to be targeting, Qatari natural gas exports, because I think everybody understands that in order to rebuild Palestine, you're going to need these export revenues. So I don't think generally the Arab states are going to have their energy assets targeted by either terrorists or asymmetric attacks. So then that kind of leaves Israel, and maybe I could see Mossad going after oil tankers. I think that's plausible. But I don't necessarily see them going after, Qatari LNG assets. So then finally, I guess you're left with lone wolves here.
That's super fair. No, I think you're absolutely right there.
Basically, it's going to have to be a lone wolf attack. There's always been that risk in the Middle East. The question then is whether, insurers and underwriters and market participants see this as sort of a broadening theme, and whether there's going to be more, whether one lone wolf attack is going to be predictive of future ones, or whether, okay, this kind of blows over. It's just kind of like, the guy threw his shoe at, George Bush, but he didn't kill him, and we moved on, and there's been other presidential visits to the Green Zone in Iraq after that. So I guess my question is, do you see a specific catalyst at this point?
For gas to go up or catalyst? Like, I see a specific catalyst for gas to liquidate. Like, I've detailed the liquidation thesis. The whip back would be reload. My kind of the reason why I would love Ben to pop up, even though I know he says he's not a geopolitical expert. I know we're not going to hold him to anything he says, but I think he's got probably the best, because he monitors all this shit better than I do. But I do think just the left field lunatic that decides I'm just going to hit something. I don't know. Like Elena, I do absolutely agree with what you're saying. Is that it's not in Iran's interest to take out Qatar LNG carriers, but if they were to,
I interject for a second. Wall Street Journal updated a minute ago, and the headline is that they're intensifying airstrikes. Gaza's internet access is severed, and ground raids are continuing, as it looks like there may be an expansive operation. But that's just what I'm seeing at Wall Street Journal.
Yeah, fair. Well, yeah, it's kind of expected, right? Like the Israelis are going to cut Hamas's head off. My biggest concern, and I don't really want to talk about it because I get we may get drawn into something, but all I'm saying is I hate death. I hate the fact that Hamas will hide in its fucking tunnels and a lot of civilians will die, and that's really sad. That's all I've got to say on that bit. But like. On the escalation, like, yeah, I agree with the Lino's point. Like, it's not in anyone's interest to hit an LNG carrier out of Qatar, but yeah, maybe Mossad hits an oil carrier. But again, what does that look like, right? Like, do you sink an oil carrier in the Straits of Hormuz? Because if you do that, all shipping is delayed. It has the same effect, right? You're constraining LNG supplies. Because if you do a strike in the Straits, all tankers suddenly just go, oh shit. Granted, Qatar has one of the largest sovereign fleets of energy carriers, but the insurance will fucking skyrocket. Granted, it's their ship, they can do what they want. But it becomes hard to navigate, would be my only point.
I mean, okay, so we could have the Yemenis. I mean, Dirk, are you talking about the Strait of Hormuz or the Gulf of Aden? First off,
I'm talking about the Strait of Hormuz. I don't give a shit about the Gulf of Aden. Like, I think the Gulf of Aden is, there's so many fucking US aircraft carriers and whatever sitting out there, or whatever strike groups sitting in the Gulf of Aden, going into the Red Sea. That we don't really need to worry about that transit zone. I don't think. Maybe I'm wrong. Like, famous last words. To me, it's the Strait of Hormuz, right? If Mossad, following your logic forward, right? Mossad strikes Iranian oil tankers in the Straits, right? Is that what you're saying?
That would sort of be one
misunderstand a bit.
scenario that I would allow for.
Yeah.
A reasonable possibility here, maybe above. Let's call it 10% to 20%.
Yeah. Okay. 10 to 20. Yeah, exactly. That's sort of what I'm. That's also the probability I'm assigning to all of this, right? And I just found it interesting, Ben saying there's a 99% spillover effect, and I'd love to explore that a bit further in a non. We got
him. Ladies and gentlemen, we got him.
Yes, we got him. Yes, we got Ben, because this guy's a gentleman and he knows his stuff. And as long as we make sure we keep the crazies out, I think we'll have a really interesting take from Ben if he's willing to give it to us. Ben, this is your moment.
Dirk really twisted my arm. So yeah, I think you guys remember me saying in our chat like a week or two ago that this thing was far from de-escalating, and it's obviously only expanded. We have it's just going to be another fucking proxy war. Like it's already been escalating pretty much on a weekly basis at the least. That obviously you have the extremist groups that are targeting U.S. bases, and then we hit them back by targeting Iranian proxies in Syria. And that was, last night. It was funny because I was talking to my friend about this. So he's a lot more seasoned than I am, and this kind of realm. But we were both just like, why haven't we hit back for like the attacks on the U.S. bases yet? It just seems weird, and it also seems strange that it's not really even being talked about that much, because typically when U.S. soldiers are attacked, it's kind of a big deal. And then of course 4 hours later, we strike a bunch of Iranian proxies in Syria. That's an escalation there. That's already a spillover. It's already again, it's going to be like one of those proxy things, because you have the Houthis in Yemen, you have all the various factions in Syria. It's like the entire place is just kind of primed for a insane, like multifaceted proxy war. And obviously Russia's still got a ton of hardware that they can send out to people that they're sympathetic to, if only because they're an enemy of the U.S., enemy of my enemy and all that stuff. So yeah, I just see this basically turning into like the next Syria, except it's just like basically it's like almost like an expansion of the footprint of the Syrian conflict. It just starts kind of spreading like a disease.
Ben, that's a reasonable point. And ultimately, over a long period of time, that did affect Libya. And we could have, I mean, if you see it spreading into Iraq, if you see it spreading into Iran, I guess it's kind of, there at least through proxies, or God forbid it spreads into Saudi Arabia or the United Arab Emirates, then, I mean, you could have the same sort of outcome in terms of, Libyan production. But this would take a number of years to sort of degrade that.
I mean, I think Saudi is in the sights right now. I think that's probably the next kind of imminent target, because Iran has a really long-standing relationship with the Houthis. That's one of their favorite places to funnel money and weapons into, because they're pretty fanatic and they have the balls to attack Saudi Arabia, whereas a lot of others do not, because obviously the implicit U.S. backing. So I think that's going to be probably the next sort of proxy target for strikes kind of against an American asset, will be in Saudi Arabia. Because it's just too easy. Like for like on a logistical basis, it's pinched pretty much right between Iran and Yemen. I don't know nearly enough about Qatar and like to kind of to really comment on that one too much. I bet if we could get Deer in here, he'd give us an earful. But I think that Saudi Arabia is going to be the next thing in the sights.
I'm still skeptical of that. I think, if you listen to some folks, there's been a lot of diplomatic progress between the Saudis and the Iranians. They've kind of made it clear that they don't want any trouble. There's been there's been a shift in the diplomacy since 2018 or 2019 when Iran attacked Saudi assets. But anything is possible, and the history there does suggest we could revert back to that.
I mean, it was 2 years ago the last time that the Houthis launched like a drone or rocket attack on Saudis.
I think that was like 2019, where they actually affected oil field assets. Supposedly, Iran has backed off supporting the Houthis, but
come on, fire. The way that they can escalate this is go after pipelines or oil infrastructure in Saudi Arabia, which would hurt the West. So if you see Israel going in there in racking up a body count, I'm sorry for being kind of graphic. It was just if Israel goes into Gaza and civilian casualties go way up, the rest of the Arab nations are going to take it out on the West, right?
That's exactly what's going to happen.
The way they can do that is go after Saudi Arabia. That's an easy way of going after the West. So
number one, they're not going. Number one, the U.S. is an energy exporter. So is Canada. So is Australia.
But what would happen to oil prices, though?
They're hurting Europe.
What would happen to oil prices? What would happen to oil prices, Illini? They would go up. That's a way to
oil prices.
Yeah,
and China.
but Illini is right. and I know it's right though, is that the biggest loser in every single war game or scenario I'm thinking about, Europe loses. Europe is so fucked, whatever way you cut this cake. Is it an oil strike? Is it an the United States does produce the large. I think you're now number one largest producer in the world of oil, right? It's between you and Saudi, give or take, where they're the weakest. And so the reality is, Europe is the one place where this gets fucked. And to be honest, if you would take a kind of, I don't know, old James Bond Spectrum level of evil, Spectrum would look at this and go, brilliant, right? Because Europe would become so unstable that the second largest currency traded on this planet becomes a moon credit overnight. Like, if you want to destabilize the West, you destabilize the second largest fucking currency, which is the euro. And if you destabilize that, you know, you guys in the West, in the US go, well, fuck Europe, whatever. You know, fuck you. Like, if Europe goes down, you're coming down with us. And it's going to be a horrific shit show.
Yeah, it's not like America versus insert country. It's the East versus the West.
Alina, I would think that Saudi Arabia is definitely a target. I think Ben's 100% right. I think there's more than the market is showing, right? Like I 100% agree with Ben.
So Ben, your idea around. Oh, sorry. You go first.
Production for a second. Saudi's net of the production cuts. We're looking at sub 9 million barrels per day, whereas U.S. production is now closing in on 13 million barrels per day. So there's actually a pretty big delta in favor of U.S. production versus Saudi. But just wanted to mention that. Go ahead.
Yeah, for sure. America is, and again, this is the beauty of America. America is a continent surrounded by water. You've got one border that you give a fuck about. You're not really worried about the Canadians invading you, and Canadian migration. So you've got one small slither of the border you give a fuck about. You're a size of you are a continent.
Fun
and
fact,
you have
I
more
walked across the border from Canada to the US, and it was an absolute
yeah, absolutely, and it's lovely, right? Because again, it's Canada, right? Like you're not really that worried. But the reality is, the United States has the ability to create all of its cover all its fossil fuel demand. It's got the ability to cover its raw material demand. It has the ability to feed itself 20 times over. Like it is an amazing continent to be on, because you have security not only in energy, food, and raw materials. You literally rely on no one in this world for anything, except for cheap labor. But let's be honest, you could bring that back on shore and do it yourself if you could be bothered.
We call that Mexico.
Yeah, well, anyway, but like Europe does not have that. Europe is energy deficit. It has labor. It has a shitload of Eastern European labor. It has a problem with raw materials outside of certain key ones. Like, yes, we've got the North Sea gas fields, but they aren't enough. There's a lot of coal deposits, which we don't touch because of, the green transition. But yeah, I just wanted to touch back on the Saudi comment Ben made. How many? Because I do remember when Saudi got very worried. I think it was during the Arab Spring. Saudi got very worried about the Shia population that has been repressed inside Saudi Arabia. Bahrain's got a much larger by total population, Shia population, than Saudi Arabia does. But Saudi Arabia still has a meaningful number of citizens or individuals that are of Shia belief, which is an Iranian. Yeah, again, it was back then. I think probably 10 years ago when this was a thing that we were talking about. Ben, please correct me for my ignorance, but I think it was 10 years ago when this was something everyone was talking about. Has that gone away, or is that what you're highlighting as how this can escalate and be a real problem for Saudi Arabia is the Shia the minority that sits within Saudi Arabia.
I mean, yeah, there's always going to be an internal amount of that population that's very sympathetic to kind of extreme and militant causes. And yeah, that was Arab Spring, but that was also because that had to do with a lot. That was like that's a whole like another topic for another spaces, I think. I'd actually love to do one of those with deer, just on the Arab Spring. But I mean, the what really kind of kicked that off too, though, was like basically like a lack of food security, which isn't really present this time around. We kind of brushed close with that. Like, a lot of people were kind of freaking out about, what was going to happen with all the grain after the Ukraine war kicked off. But that was a huge part of the Arab Spring, was just like food insecurity. What's that saying about like people you're always like 3 missed meals a day away from revolution?
No, I actually counter that. Egypt is fucked because of that. So Egypt has, it's called fuck me, I can't remember the exact words for it. Someone can Google this, but it's the bread policy. So every single person has subsidized bread in Egypt. And it was roughly 0.5% of their budget would go to feeding the population their bread allowance, right? And now it accounts for about 5% of the budget has gone to the bread allowance. And because they're so reliant on Ukrainian wheat, and they still are because it's the shortest point of transit, the cost hasn't, you could look at CBOT wheat, you can go, well, American wheat is X. Yeah, great. But they're buying fucking Ukrainian and Russian wheat, which is coming out of the Black Sea. And it's still elevated. And we had, a month ago, I think it was the UAE came in and basically issued a line of credit of about $500 million for exactly this purpose. So the food crisis is still very real in that region. And the fact that the grain deal was suspended has hit Egypt harder than any other country, and that's why that currency has devalued so much, because their budget cannot absorb that cost of feeding their population with that bread subsidy. And obviously getting rid of that bread subsidy would be paramount to another revolution in Egypt. And when you think about Egypt's position in the geopolitical spectrum of what's going on, well, that's huge, right? You can't allow Egypt to become stable. Israel, especially, in the United States, especially as well, if they're supporting Israel, because suddenly the Sinai border becomes even more uncontrollable.
That's good color, a good point.
Paul,
Actually, can you guys?
everyone. The world
Can
is
you
ending.
hear me?
Jesus
I
I was
can
having
hear
like
you.
audio issues. Yeah, I was having
And
audio
Chad,
issues
I
earlier.
can hear you too.
Oh, well, there you go. I'll let Paul go.
Yes to your question, Paul.
Oh, wait, is it too loud? I'm like by wind right now, so I don't know if it's too scratchy.
It's
Let
fine.
me know.
I mean, Dirk's got the party in the background, so you'll be all right.
Yeah, I'm right next to the river. I'm trying to get away from it right now. No, sorry. So I missed. I was going in and out because I was just having connectivity issues. But I mean, do you guys? Is there an establishment in the space so far that the countries that previously contributed to the Arab Spring are not in a position to economically do that right now?
I mean, I got a sense from what Dirk was referring to regarding Egypt was kind of touching on that point that you're making, but I don't know if we've precisely gone down that discussion.
Yeah, because I know like everyone's trying to play like, okay, what happens to oil? What happens to wheat? What happens to this? What happens to that? I mean, like the reality of the situation is like, if you look at all the countries in that region, friend or foe, there is a lot to lose for each of them right now, and obviously the
recent terrorist attacks have tried to isolate the situation to just Israel and Palestine, right? And there's been some exchanging of fire between Hezbollah and Israel, and then some other groups in Syria, which I think Ben just mentioned that just recently got bombed by U.S. aircraft. And then you have like Iran, funding, Saudi Arabia getting nervous. Who is it? Qatar, who's like trying to mediate everything, which I think is hilarious that they're the ones who have to mediate things. But when you look at the big picture, you have all of these countries who have quite a lot to lose if they do anything stupid. And I'm talking about the core countries. I don't mean the militias or groups inside of the countries. I mean the countries themselves. That's why Egypt isn't going to be doing anything stupid, which they've actually tried to like contain the fallout by like not letting Palestinians go into Egypt with the risk associated with that of like letting potentially Hamas terrorists into their borders, whatever. But they kind of relented to send aid at least. You have Iran, who's just I don't even know what the fuck they're doing anymore. But then you have Saudi, who's getting really scared. But at the same time, Saudi Arabia, for the longest time, whether you're pro-Republican or pro-Democrat, like whatever, right? They know America still needs their oil. They know that they want America to still need their oil. And then we also know that Saudi Arabia still wants our military hardware. So they're nervous in the sense of like making sure that nothing stupid happens. And I think Ben also mentioned it. Maybe I'm wrong. I was in and out, but Saudi Arabia even yesterday shot down a Houthi missile going towards Israel. Like, I mean, you gotta understand the stakes that are at play right now, and how I wouldn't say no one, but how a lot of smarter individuals are trying not to allow it to escalate. And then you have two aircraft carrier groups. One's already there, and one's headed to, I think, the Strait. But then on the flip side, which no one's talked about, which I've actually kind of shocked about, is China, who wants to play some type of role in this, has already sent 14 warships to the Gulf as well. Like, for what reason? I have like no fucking idea. They're not a deep water navy, so obviously they're just like taking the coast right all the way up there. But either way, the thing I'm thinking about is just like, if anyone, I don't know if there's any veterans in this space, so please correct me if I'm wrong, but when you talk about Israel expanding the conflict by doing a ground invasion in Gaza, which they've touched base on, I think on Wednesday, and then I think earlier today, their time, just testing the boundaries. Urban combat is the absolute fucking worst. I mean, when you look at how the Americans invaded Mosul in Iraq, there was over 10,000 casualties in a matter of weeks. Like, imagine what's going to be in a densely populated city like Gaza, right? There's a lot at stake, and everyone is like literally walking on eggshells to just not do anything stupid. I'm sorry if I repeated myself. I wasn't here for everybody's opinion.
I think what you just brought up about the fact that Chinese are putting, because I was reading about this probably last night, that really surprised me, that the Chinese are putting frigates into the region. That's wild to me.
Yeah,
and
they're trying to flex muscles, like someone actually gives a shit about their opinion.
Yeah, but I just don't understand why they're there. Like, it just doesn't make any fucking sense. Because Chinese foreign policy has been to just not really get involved with anything. Make noises about Taiwan, but really Zhonggao, the Middle Kingdom, they don't give a fuck. Like, they're quite happy. Whoever's in charge, they'll do business with. They just want your resources.
Yeah, no, they're just trying to show face, because it's hilarious. Because if you look at the military capabilities of their battle group compared to the Americans that are currently there, oh my god, wipe them out of the face of the earth. It's like, that's how easy it would be. Not that would happen, but just saying.
Paul,
but exactly. It's the question is why? Why would you do this? But yeah, sorry, I cut someone off. I apologize. Please go.
Well, I think everything that you just stated is an escalation. It's not just Hamas and Israel right now. Now you've got Yemen, you've got the Houthis, you've got Hezbollah, you've got Lebanon, you've got Syria. Like, this is escalating, right? And it doesn't have to be the countries, because they fight wars through proxies with their terrorist organizations. Qatar funds Hezbollah. Iraq does Hamas, right? They sponsor Hamas. So, and the Houthis. So I think that's where the wars are going to be. And those are the,
Well, yeah, but I mean, like Hezbollah's like, I'm not gonna I gave him multiple, but I actually don't know. But I just know for a fact that Hezbollah is way worse than Hamas as far as military capability. They just have a lot more arms than Hamas does.
Yeah, 100% they are 100, and they do nothing without Iran, right? So, if they're doing something, Iran's probably notified. So I think it is getting worse, and it's not the countries you got to worry about. It's the terrorist groups, these organizations.
So that goes back to my point, is that my worry is it's not going to be a state actor, well, unless it's Mossad taking out an oil carrier in the Straits of Hamas. I don't know if you say his fucking name right. In the Straits, it's a rogue element, right? Rogue elements that's the problem in the Middle East, is that they have semi-functional societies, but underneath them, they have minority populations, especially in the Sunni majority areas. The Shia populations are incredibly aggressive. I'm not saying that as a catch-all statement. I'm not being rude or whatever, right? But like, my point being is that there is an insurgency within each one of the countries we've talked about, right? There's one in Saudi Arabia. There's one in Bahrain. There's I don't think there's anything in the UAE. Obviously you have Yemen. All of those countries have the ability, the militias inside of those countries have the ability to just launch random shit at carriers, oil or LNG or whatever, and launch a couple of missiles at those in the Straits. Then oil will just go parabolic, right? And gas will go parabolic. I don't know. Like I put it at 10%, but again, it's.
Yeah, I mean, oil prices go parabolic, but that's assuming that the demand's going to be there. Because if you think about it, like the rest of the world is approaching winter season, right? Which is historically a slower period for oil demand, right? So I mean, you have that going for you. I'm not saying that's a clean cut, like okay, we're going to be fine.
Yeah, but gas is your curveball. Gas, LNG. This is the first.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
Time
yeah, I'm talking
ever
about
that LNG will be, but LNG comes out of that area. Qatar is the supplier of the world, right? So if you take out the ability of Qatar to send carriers out of the Straits, then again, Europe is the short, right? Just short the euro. Like that's the trade.
Yeah, but if you want to talk about the Strait too, it's like okay, Egypt tried to like sue back all the revenue that it lost from who was that, Evergreen or Evergrande or no, Evergrande is the Chinese one. Evergreen, the tanker that got stuck in the Strait and it cost them, what was it, like $100 billion in revenue loss?
But that's a different Strait. That's the Strait. That's the Gulf of Aden. But that's the Red Sea, Gulf of Aden. I'm talking about the Straits of Hormuz, which is the other side, right? So that is the load terminals of Iran, Qatar, Saudi Arabia. Everything really goes.
Yeah, but isn't that where the Eisenhower is going right now?
No, I think the Eisenhower is going into the Red Sea, right? In the gate. No, I think it's going to the Red Sea, right? Oh no, Eisenhower is going to the Mediterranean. I don't know. Again, someone more experienced and who has more knowledge than I do, please tell us where that carrier group is going. But my understanding is there is very little sitting in the Straits of Hormuz at the moment.
I think it's changed a couple times. I know originally it was bound for the Mediterranean, and then things were escalating. So like, oh, we're gonna move it, and then China was like, oh, hey, we're coming too, and it's like, okay, well now we got to move again. So I think that's kind of what happened. I forget exactly what the.
It still says Mediterranean. They're still headed towards.
Yeah, I think
that's outdated.
I think the Chinese are actually going to the Straits of Hormuz, whereas everything else is in the Gulf of Aden and the Red Sea, because that's where the destroyer, the Archie Berkeley part or whatever fucking bastard frigate shot down the Yemen missiles earlier yesterday. I think that's right. But it's a sizable difference, right? Like They're two different areas.
Okay, I will offer the world is not going to freaking end perspective. This isn't quick because okay, Iran has gotten what they've wanted out of this, which is basically to stop the Israeli and Riyadh peace process. That's it. Tel Aviv to basically, sing happy kumbaya. We're gonna, move on to the future. So Iran has they have a willful puppet in Hamas, and the Gazan people are now going to basically for this because they have implicitly supported. Their support for Hamas has grown, and they're now going to basically find out what happens when you fuck around. Don't start wars. You can't. But because conflict is going to be, everybody knows that a ground conflict is coming. Everybody knows that Israel is going to basically occupy the Gaza Strip. They're going to, they're going to try this again because this, and then they're going to end up basically leaving in a couple years, and whatever replaces Hamas we'll be talking about in 2027. That's pretty much what's happening here. But I think Lebanon has no reason to want to get involved here. You have two
Is he cutting in and out, or is it
aircraft
just
carrier
me?
battle groups.
He's cutting in and out, yeah.
Yeah, Chappie, your connection's pretty shitty.
Oh, am I cutting in and out? I'm sorry, Jesus Christ. All right, can I
You can leave and come back, yes.
be heard better now? Where did I stop cutting in and out? Where did I start?
No, I could probably summarize what Chappie's saying. It's what Chappie's saying is that this entire thing was a move by Iran to stop the Israeli Saudi Arabian normalization, which is probably true, right? Because that normalization changes the face of the Middle East. I just hope that
But I mean,
peace can be found, right?
to be fair, Hamas probably went way too far than what Tehran wanted them to do. Because
I don't know, man. As I said in the chat with you guys, I don't know how many people on this chat have even been to Israel, right? The animosity between both groups of individuals, of the Palestinian and the Israeli side, is just so bad.
Well, yeah, because there's no solution here. Neither side really believes in the two-state solution anymore.
No, I agree. But I as an ex-historian, right, I draw parallels to the Northern Ireland conflict. There were moments in the Northern Ireland conflict where there was no solution, right? The IRA would just systematically bomb the fuck out of everything, and the British would support, with the support of the SAS and militias on the ground, commit atrocities. So both sides were committing human atrocities, right? This is, on the doorstep of the United Kingdom. And there was an ability to find peace. There was, right? And if you listen to any of the commentators who were part of those negotiations...
cutting in and out for me.
Oh, sorry. There was a moment where those negotiations, where both parties said exactly what you just said, is there is no way to find a peaceful recourse to these actions. And what I find fascinating in listening to a lot of spaces on Twitter is, a lot of Americans. What's going on? Someone's eating choco. Someone's eating a choco.
One thing I did want to point out is, as somebody who grew up in New York and was in middle school during 9/11 and had people, classmates who had family members and parents die in the attacks, I actually think the attack on Israel was worse on a relative basis than the 9/11 attack. And I don't know that people appreciate the sheer brutality of the attack and quite what happened. I don't know. It seems like when I see all of these like college kids in the Americas that are saying death to Israel, kill the Jews,
Jesus Christ.
it's very startling.
No,
Yeah,
Quite sick.
it's insane. I mean, no, everybody.
it's
No,
fun.
I'm sorry.
It's fun.
I'm sorry. Everybody has basically swallowed the fucking Noam Chomsky. Gaza is an open air prison. Bullshit. It's bullshit. This is by choice. Okay, they have a border with Egypt that Egypt will not open because Egypt hates them too. Because this is just a population that is ruled by just people that are just more trouble than they're worth.
Can I strongman this, right? Can I? I'm not going to argue the sci-fi things. What I'm going to say is, during the IRA conflict, the Troubles, as we call it in the United Kingdom, right? Half my family is Republican Irish. We trained De Valera's troops to defeat the British to get independence from the English, right? That's my family's history. But when I grew up, there was a new form of IRA, the new IRA, which was, or the real IRA, which was systematically bombing most of northern England. And that was pubs, the Omaha bomb, which was a dissident group, which we think was part of the IRA. It was literally sanctioned by the IRA Council, which was Jerry Adams and Martin McGuinness, who, were part of the peace accords. Where 300 people died instantly, and the reality is that American individuals were funding that terrorist organization. So I love that we seem to have this fucking blackout of reality. That I'm sorry, guys. Like,
well, Dirk, there's already been a Good Friday agreement. There was the Good Friday. It was Camp David in 2000. And the Palestinians rejected it. There was the Good Friday Agreement. It was on the table.
I agree. I agree with you. I agree with what you're saying. What I'm trying to point out is that the support. So we've got this shock and horror that you're, and it's the same. I'm shocked by in the United Kingdom we see these people who are advocating the death of the anti-Semitism is shocking to me, right? What I witness on the news, and I can see, and I've been to school with these people that I've just gone like, you're fucking mentally retarded, right? This anti-Semitic shit is just not acceptable. But what I would say is take a step back and look at history. There was a moment in history where the US, you guys were fucking funding the IRA to nail bomb the north of England. And I'm not saying this is good or bad. I'm just pointing out that it's so much more complicated than black and white, right? This shit is shades of grey of nonsense. I'm just shocked. Well, I think Sherko brought up a really good point. Like, or someone else, I can't remember who it was. It's just the level of anti-Semitism that is being revealed is shocking. Like, I honestly thought we had moved on as a society from that level of anti-Semitism.
Yeah.
That was your point. Yeah, that was Ron's point. I thought we had moved on. I honestly had, and I'm so shocked to see this level of anti-Semitism.
I feel like that's kind of naive, to be honest with you. That's like saying racism in
Why do you
general
say
we moved
no?
on from.
No, fair enough. Yeah, you're right. I'm an idealist, and you're right. I am being a little bit naive.
Look, you now just have coded language. It's just coded language that is used to call for another Holocaust, and it's now just free Palestine. Because if someone is saying free Palestine, well, you have to ask them that question. What do they mean by free Palestine? Because if they mean free Palestine from the river to the sea, that means they're advocating for the end of Israel. They want to, and the next question is, are they advocating for what Hamas is advocating for, which is to basically kill every single freaking Israeli Jew that they can?
Yeah,
these are the people that you're dealing with here. So
I agree with you, right? Hamas is a terrorist organization,
which
needs
is
to
a
be
lot
annihilated,
different
but
than the IRA, which seemed to basically be happy with essentially until Brexit happened. This idea that you just had a disappearing border. And the border between Northern Ireland and Ireland just went away, and everybody could just pretend that they won.
So one of our family friends was one of the lawyers who represented a lot of the IRA commanders who ended up in Maze in the prisons. The IRA, the biggest problem they had was they became a criminal organization. They have become a criminal organization because it suits them to instill fear in their communities, because it gives them leverage for extortion money. That is literally what is happening right now. They are no longer what my family fought for in 1914 for the independence of Ireland. Granted, I sound like a Brit, but that is my family's heritage. De Valera trained his troops on our farms in the the east coast of Ireland, in Wexford. Like, this is a completely different IRA, right? They are a fucking bunch of scumbags. They are scum. They are absolute fucking scum.
I would love to ask Dirk and Eli and I, due to the tightness in the markets, if Saudi Arabia pipelines or infrastructure was to get bombed by the Houthis, or I mean, what does that do to oil prices in the short term? I'm just curious, and I see Josh just jumped in. Eli and I and Dirk, I know you guys both look at that side of the positioning and how tight the markets are. If that was to happen, what would be the outcome short term? Eli and then Dirk.
Jeffrey, I'm going to sort of give you the response of a beleaguered, fourth turning market bull in this oil market, which is to say that the market seems utterly obsessed with demand risk and not about supply risk. I think we rally $5. I think we rally $5, and then I think we wind up getting shortages somewhere. And then it's like, well, okay, we got to do some more stuff, because there'll be people with credit cards that will work, that will put their card in the gas pump machine, and there simply won't be any oil available gasoline available to sell to them. That would sort of be my framework for thinking about this, because there's simply just a lack of liquidity in the commodities market.
So I saw the Rory Johnson $5 geopolitical risk, and I think he nailed it. But that was just Israel and Hamas, Israel going into Gaza, right? That kind of escalation. But if it escalates to Saudi Arabia, Yemen, and some of these other areas, you think it's still a $5 risk?
If we Jeffrey, if we get a pipeline bombing in Saudi Arabia, what will I mean, I'm saying this almost kind of tongue in cheek, but let's say that they take 2 million barrels a day of Saudi oil off the market involuntarily, and it's going to take 6 months to put it back on. I think the initial market reaction is going to be that oil moves up by $5, and like all the Tesla bulls pile in. $5, and all the Tesla bulls pile into their stock, and Tesla rallies $15, while Elon says that he's going to basically become a drilling company. It'll be something stupid like that.
Don't you dare!
Amazing, amazing.
It's all for the mission. Liquidity.
He's doing it for the mission.
There's not enough liquidity.
Yeah.
Do you agree with that? Just a $5 move? Like
initially,
no.
$5.
No, dude. I bid 5. I honestly, if they take out a pipeline that is accountable for 2 million barrels a day, fuck it, we're going to 150 in about your heartbeat.
Well, yeah, and what's the statistical likelihood of that? Like maybe 1%, if that.
Less than 5%. But Dirk, would I say if this were the aughts market, I would completely agree with you. We'd move up $50. You take 2 million barrels a day off the market involuntarily due to a terror attack, and it's going to be offline for 6 months.
But what I also think is you hit on a really good point. That is liquidity. If we look at the open interest in these markets, in the commodity markets especially, open interest has been on the down. right? So we're now trading commodity market. Majority of commodity markets are now trading in relative to normal liquid status. Now, that's not to say they're completely illiquid, but they have become more liquid to what they normally should be trading at. So anything that can affect, especially a 2 million barrel move, is huge. A 500,000 barrel move is enough to move $5 easy. A 2 million barrel move, a proper 2 million barrel, let's put it that way, right? Like not like Saudi Arabia goes, well, I'm going to cut X, right? Yeah, whatever. He gives a shit. But if you bombed a pipeline that actually constrained that, yeah, we're getting 150. Like, I have no shadow of doubt because one, the liquidity in the futures markets is no longer there to absorb the hedging risk, the hedging demand that comes in with that. And on top of that, you have the merchants that feed off volatility. Like literally, this would be the four major oil energy houses would absolutely push this thing way above $5, right? Like Gunvor, Vitol, Glencore, and Trafigura will move this market. If 2 million barrels actually gets hit on a pipeline strike, then yeah, those four trading houses will take you out. And that's the reality.
The Fed will just raise rates, and they'll create a currency crisis somewhere else, and then those people won't be able to buy oil, and we'll be back at like 90.
Yeah,
by the time we're done with
but the reality is that every single okay, I'm got to be careful here. My last employer, so those of you who know me who know who that is, we have a multi-billion-dollar credit line at 0% interest rate. I know the banks that have issued that. There are 3 of them, and it is about $3 billion that allows this one of those 4 to trade whatever the fuck way they want, right? So in the futures market, and that's 0% interest rate, 0, as long as you do it through their trading desks. So factor that into that equation, right? Like that's what I'm saying. It is interest rates only affect those who are poor. If you're rich and with shitloads of money, you're not paying shit. You really aren't. You're being incentivized to trade with the bank, and the incentivization is 0% margin on your account. And that's
Derek, you and I both know though those also come with strings attached. It's not just like 0% as long as you trade with us. There's also a lot more requirements involved.
No, there really isn't. I literally sat there with $1 billion on our unit, and from a lovely Australian bank, and the covenants were not restricted at all. To be honest.
Australian bank capital controls. Sound shit.
But they also knew what you were trading, and they knew what you were doing. You weren't really going to go too far off the reservation.
Actually, so. You know what? The only bank that didn't give us the credit lines was JP Morgan. So fair play to JP Morgan. Everyone, your cities. Actually, shit, I shouldn't name names. Anyway, a lot of companies, a lot of banks did, and they do it not just to my old company. They did it for Trafi, to Vitol, and to Mercuria and Gunvor. Glencore. There you go. Like it's a different world. Interest rate arguments are only applicable to the minnows. They are not applicable to the big boys, and that's a sad reality.
Dirk, I agree with you, but the thing is that when the Fed hikes rates, they're going to cause a currency crisis in Kenya or Pakistan, and that demand will get taken off the market. Number one. Number two. I mean, I see what you're saying, but this is a 100 million barrel a day market here, right? So that's $10 billion a day of supply and demand balances going on.
No, I agree.
6 billion barrels of oil. That's at $150 a barrel. That would be that would be $1 trillion market. Now the irony is that Tesla or Microsoft could go out and do a merger with these things, but for for us small players in commodities like Trafigura and Gunvor and everything, I think that there's not as much liquidity here as there was 15 years ago. Okay,
100%.
I'll allow the possibility for 50, but and I'm saying this tongue in cheek. There's also a possibility that the markets, just don't care that much, and we just wind up with shortages or something weird like that. That's lots of
Yeah. No, I'm sorry. You go.
No, I was going to say, can we all see the trend that we're talking about here and what that brings us back to? Because it sounds like everybody should still be going long defense contractors, big picture here, 50,000-foot view. I'd rather be the guy supplying the weapons than the guys worrying about oil, to be honest.
So I got a question. So what you're saying, I was just kind of following along. Dirk, you're saying hypothetically, if there's an attack on a pipeline, that you think major oil companies will have enough leverage to fill the gap in the meantime till they get it back going, or what was that? What were you saying?
No. So I'm merely talking from the oil trader, the energy trade houses. The energy trade houses have very little actual assets. They are there to speculate on volatility, and essentially they have been the biggest beneficiary of Dodd-Frank. So in 2008, all the banks were told you're not allowed to trade physical commodities. So Dodd-Frank regulations rolled through, and so all the banks offloaded their commodity risk on so in Citigroup it would be called the GTS, and they would offer offer the trade houses. So on the energy side, that would be Trafigura, Glencore, Vitol, Gunvor. On the agricultural side, that's going to be your ABCDs. So that's going to be ADM, Bunge, Cargill, Dreyfus. Those companies have benefited massively from Dodd-Frank because the banks who are underwriting all these loans to farmers or cooperatives on the farming side, or if it's going to be oil fields, gas plays, LNG facilities, they then unwind that risk or offset that risk. Sorry, they don't unwind it. They offset it by selling it back into the market, but it's much easier for them to just go, okay, I will lend you Trafigura X billion dollars, and you become our essential trading unit. So they've outsourced their trading exposures to the commodity trade houses. So the trade houses are now experiencing this massive credit arbitrage that they never would have been able to. Mark Reach's time would have fucking cried rivers for what these guys now have, right? They have access to capital from the banks, and not only access to capital, now they have access to trade flow, because the banks, and I witnessed this over and over again, the banks go, oh, we've got X amount of jet fuel that we need to offload. Do you want the whole book? Right? And so pick an airline. They just go, okay, we need to hedge. That gets literally shunted 1-for-1 OTC into a trade house. The trade house then manages it. So what used to be on the trading floors of a bank, where you were able to warehouse risk. They can no longer warehouse that risk. They now literally just push it onto the preferred trade house, because those trade houses have the same credit lines, whatever, right? It's a symbiotic relationship, but it's crazy. But all you've done is move the trading floor from a bank to a trade house. That's it.
So do you think that arbitrage reduces their risk? Is that what you're saying?
No, not at all. I think we've increased the risk because the banks don't understand how trade houses work. I've met a lot of people across the equity space through working at the old trade house I used to work at. In the division I worked at, we were talking with a lot of equity long short guys, because we like, again, I'm super interested in so bit of caveat, I'm super interested in how you guys who are trading equities think about the market, because to me the biggest value add to the commodity sector is to understand how capital deployment will be for future projects XYZ, right? For me, I know what the commodity is doing in the spot market. I can literally pick up a phone and just go, what are you selling that cargo for? Spot XYZ, right? That makes it interesting because I know what your revenues should be on a equity basis, but I'm super fascinated by how equity markets function, because equity markets function on the multiplier, which seems to be fucking make-believe.
It's a lot of hopes and dreams that it runs from.
Yeah, exactly. Whereas I believe in fungibility, right? I know that if I take, let's say I take a million tons of iron ore into delivery, I've got a million tons of iron ore. I know where to put it, and that's okay. I'll probably roll that exposure, but I could take that to delivery, if that makes sense. Okay, whereas in equity markets, you guys trade on a strange multiple that I find fascinating.
Okay, so Dirk, you have that that contract that you're talking about in the iron ore market, all right? So the equity market, in comparison, is basically several months trading in advance, so-called forward-looking. Whether it is forward-looking or not is always up for debate. But basically, it is a debate on what is going to actually happen with that iron ore contract that will be signed that you just did 3, 6 months, year, whatever it is from now. And in the equity markets, you get crazy price action as people are essentially investors buying and selling, trying to decide what exactly that equity is going to be worth based on some event that's going to happen in the future. Whereas but I think in the world that you work in,
let's call it 80% of the equity value resides in the terminal value, or some plus or minus. Yeah. So you're talking about values many years out, right? When you're trying to conduct an equity valuation.
No, sure, exactly, and it's how far out and you have because everyone has a different time frame. Of course, for some people, this is they'll buy something and it's a 5-year hold for them, and for some people, it's a 5-second hold. And everyone has sort of different time frames, and what the time frames that everybody has then sort of averages out into what the current stock price is based on a discounted valuation of whatever it is. And so you could say that you could just determine what different equities priced are. I mean, we're getting into the theories, into the the weeds here, but basically
but I think it's super interesting.
Well, I mean, basically the equity market is effectively it is a debate that happens in price action concerning a future event. Not necessarily something that, where you're dealing with what you're talking about with an iron ore contract of like, hey, I have this iron ore. This is what I'm looking for a buyer. They're going to sell it or they're going to buy it from me. And then it's going to go someplace and it's all sort of set in stone.
Yeah, but can I give you a real world example? So I imagine a lot of people on this space have looked at Cliff's natural resources, right? You know Cliffs?
Cleveland Cliffs or no?
Yeah, Cleveland
Not Cliffs.
Cliffs.
Oh
Cleveland
God,
Cliffs. Yeah.
oh geez, not Cleveland Cliffs. All right,
Yeah.
go on.
Yeah. So in 2014, 2012. I literally, it's so long ago. But a decade ago, I went to Cleveland Cliffs with our sales guy, and we were like, "You need to hedge yourself." This is when iron ore was at 120 back then, and we're like, "Why don't you buy some puts for this amount of money?" Because Tesla Crook was doing it, right? TK was doing it on the other side. We're like, "Why don't you just buy some puts?" Because we think this market's gonna go down. And they're like, no, fuck you. We know what we're doing. Iron ore then went to 60. Or it's sub 60. That's your management, right? So when I listen to people going, Cleveland Resources really know what they're doing, I just go, I was there. They don't know what the
doing.
They manage
no. I
contracts. Dirk, they manage it through term contracts with customers.
We gave them the ability to hedge out their entire production, and they just refused. They refused. Every iron ore miner refused. The only iron ore miner that was interested, again, this is a decade ago, so caveat, right? Please be aware of that. Was Vale, and we were doing repos on the water for them. But like, it was profound because you sat there and you're like, every other commodity, like if you go to base metals, BMW's trade, as an end user, BMW's there every day hedging their exposure. TK was there again, as I said, hedging their exposure in iron ore. You had multiple entities being nimble and versatile, but the miners in raw materials, from my experience, are literally the worst when it comes to hedging anything. They just don't hedge. Right now, if I was Vale, honestly, dude, I've never seen. And if you look at their financials, I don't think they're doing it even to this day. Vale is interested in what they're trying to do is using Teluk Rubia, which is like some little island off in the Philippines, where they just load it up with iron ore and they just smash the Chinese, which I think is great. But there's no hedging. And they can hedge now because you don't need to use SGX futures, which is what we were offering them before. Which is, but again, I go back to Cliffs. They had the opportunity to really lock in profit.
So, Dirk, at the time, Cliffs was a different company. Okay, Cliffs was just an iron ore producer, and then they bought Alcor Metal's assets, and now they're a steel company. Fair. So, different management at the time. I mean, it is kind of different. They're now integrated, yes. And now they've gone crazy and are trying to buy U.S. steel, and I just hate them for it. So whatever, ruined a perfectly good thing.
Is that going to happen? Is that? Do you think they're going to buy it?
I have no idea. U.S. Steel did actually something very crazy for them, which is that they issued forward guidance for next year, which they don't do. And they basically said that next year is going to be exactly like this year, and they're just going to be making lots of money. And this is mostly about just putting out the word in an official capacity to buyers, potentially, as they go through this alternatives assessment or whatever the hell they're calling it process. I call it basically finding a buyer who's going to buy U.S. steel for half its value. But whatever, I digress. I don't know. I'm still upset about that. Not because, I've not because I'm upset that somebody's going to just buy this company for a screaming deal, but because I thought that the steel story was early and I was just not invested at the time. So, yeah. But anyway, someone asked me today who produces electric steel in the United States, and Big River Steel is
Nucor.
Nucor and Big River Steel. Yeah, well, it's Nucor, and it's also Big River Steel, which was a part of something as a part of X, as U.S. Steel down there.
As a change of topic, how much did you enjoy communist Europe on your cruise?
Oh, yeah. Okay, so I can talk
So
about
just
communist
FYI,
Europe.
we're gonna shut the space down in about 10 minutes. Just
okay, I'll give you
Chappie,
the brief.
maybe you give your Euro experience.
I'll give you the brief synopsis. Okay, so the Italians don't believe in electric vehicles, and they don't necessarily seem to believe. Look, there's what's Europe, what they're professing to do, and what they're actually doing. Which if I'm there and I'm on the ground, my imminent feeling was that Europe doesn't really have a plan, and I think I've been sort of workshopping theories in my brainstorming. Let's just go with that. Theories in my head as to why that is, but yeah, I don't know if they're screwed, but it's like Europe is this. It's a finished goods economy. And they're going about this like this process that they're some of this is just because they just became too dependent on Russian gas, and now they're dealing with the consequences of that. As if. But hey, everybody poo-poos the neocons who said for years that Russia is the number one enemy. They're that's some
Fun fact: I was writing about that 15 years ago in undergrad, reminding people that Putin was the biggest threat to humanity. But nobody wanted to
listen
to that.
Exactly. So it's like I hardly saw any EVs in Spain, any EVs in France. There was no EV charging ports in Barcelona, none whatsoever. Nobody in France really drives these EV cars. You could immediately tell just by flying over and flying into Amsterdam on the way home that the Netherlands is fucking rich. I mean, my God, they have so much fucking money.
And you
can just see
that. To add a data point from this week that I'm sure a few people in here are aware of, but that caught a lot of attention, was the Hertz earnings call yesterday, where they called out that collision and damage repairs on an EV can often run about twice that of an ICE vehicle. These vehicles were promised to have materially lower operating costs. That is fuel, maintenance, residual value, comes into play. And unfortunately, the math is not looking too good for the entities that have gone all in on EV.
Yeah, well, I mean, look, it's hybrids are the future. Toyota was right, and everybody is now sort of coming around to this fact that hybrids are the way to go.
I remember hearing that the regenerative braking is like going to save you money on brakes and all that, but
that's true. I mean, it's just I never replace my brakes with my Volt.
Yeah, unless you're getting it done by the mechanic, though, that's really not an expensive repair at all. Like I do my brakes myself, and it's like even if I do a new caliper on both sides, it's still only like $250.
Regenerative braking is just basically feeding energy back.
But you can have regenerative braking with a modestly sized hybrid system. You don't need to have a full EV to have the benefit.
Right.
And that's why hybrids do shine in city driving, because you're taking full advantage of where the EV and the electric motor and the regenerative braking come into play, but you're also not having to outfit the vehicle with a massively sized battery pack,
which makes everything more heavy, which is just because there just hasn't been. The problem with EVs right now is the laws of physics around basically lithium ion development. It's just the energy density there has just completely stalled. So everything now is pretty much not diminished. You can actually take a look at some charts here as far as energy density of lithium ion cells goes, and you had this big jump up, which effectively allowed for
Everything was riding on the
yeah
decreasing cost
Could,
curve continuing to trend
yes
downward, and
could,
that has
could,
proven
could,
not to be a good
ha,
assumption.
has anyone looked at like those the capacitor market?
Yes.
Like, yeah. Please, like, I'd love to know more about the capacitor market because that seems like everyone's yielding that as like the next thing. But I hear Ben pouring his drink, so I know
Yep.
that this is bullshit.
So
so please
fuck,
tell
it's
me
been a
why this is bullshit.
fuck, it's been a long week. Yeah, the two things. Yeah, the supercapacitor market was something that got really hyped up by, once again, no one other than Elon fucking Musk a few years ago. It's one of those things that like every like 4 to 6 years, like some new claimed breakthrough gets hyped up with supercapacitors, and it never fucking works. Like we have been through this so many times with supercapacitors and ultracapacitors, what they want to call them. It never comes to fruition. It's always like it's kind of been the same thing as like with like solid state, except solid state is actually it's real, it exists. We have production examples of it. It's just a scaling issue and a cost issue. But
and the fact that Toyota is not going to bring solid state to market until they have thoroughly tested it. This is the thing that
exactly,
nobody ever understands about batteries. You have to you cannot test these things in a computer. You actually have to do real world physical testing over years on a very specific like battery chemistry. And then once you have that battery chemistry down, you can actually put it into mass production. Then you put it into mass production and you have all the problems with putting it into mass production because you're just now doing that for the first time. So you have growing and teething pains. This is
and
why
would you
just
like to explain the
ugh.
specific reason for why battery testing takes so long, or do you want me to take that one?
Because you
Well,
have to
but
basically see because if you have an
before
anode
we
breakdown, then you're not going to know about it until you basically do this over like 5 years. You have to know what this fucking battery is going to do, what is going to be the residual capacity for holding a charge in 5, 7, 10 years potentially,
That
because potentially
part, that is actually that's probably the easiest part to figure out.
yeah.
It's kind of like a projected cell life. The big thing, the reason that the serious companies take so long to prove out battery tech, again, because like the fly in the ointment, the real fly in the ointment when it comes to this is dendritic growth. Dendrites are basically what
And then it kills the anode. Yeah, pretty
yeah,
much.
it shorts your
So,
anode against your cathode, and that's where we get thermal runaway, battery fires. That's why we're
but
seeing all
yeah,
these Teslas catch on fire.
it's so important. Everybody remember, lithium-ion batteries were invented in Japan in the late 80s.
Yeah, these are not new.
Enoloops, which is what nickel metal hydride, that was invented in like 1968 or early 70s. And from basically over 30 years of lithium-ion development is where we are today. And so in other words, like if you think that a new chemistry or you're you just have such a hard on for iron air batteries or whatever it is, like
Zinc.
you're
I
slow.
think it's like zinc air. There's some zinc air thing that's out there,
Yes,
but
just
right now the hot
yeah.
one is iron phosphate.
I mean, look. This is if you really care about this shit, all right, and you wanna rah and carbon and all the other crap, and you're not pro nuclear, you're not serious, and they're gonna say it's like, oh, nuclear takes too long. Well, that would have been great if you had just shut the fuck up about that 20 years ago. I
Fun
mean,
fact:
instead of
when
NIMBYing
Stanley Whittingham
exactly.
got his Nobel Prize, want to know where he was at? Binghamton. Let's go. But look, the issue really though is mostly that entities, states, and companies and the like, they've made this very short-sighted decision to say we're going to eliminate this technology altogether. When really
that's not happening.
Right, it just doesn't.
So
the math doesn't add up.
The Italians that I talked to, they think that they might be able to do hybrids by 2035.
But it goes back to the point about Toyota that Toyota's made, that if you truly wanted to reduce net tailpipe emissions, a fleet of 100 hybrids is going to effectuate that much more than 2 Tesla Model S's and 98.
Totally. And the thing is that you can sell a hybrid car anywhere. It doesn't matter, because it's not necessarily tied to a power grid that has to support it. By the by, the power grid in Europe cannot support electrification. And I'll just tell you that right now. I was in a hotel room where, the freaking AC was like turning off every 5 minutes. I had to go down to the front desk and tell them to stop doing that. And they were like, "Oh, no, sir, that's sorry, but that's by design. That was not by design." And they, just allowed the AC to stay on. But every single light in Europe is on a motion sensor. And I'm not talking like a motion sensor. I'm like at this winery in Italy, sitting in a toilet, and literally if I didn't move, the light turned off like after 5 seconds. Okay, that is the energy conservation mode that they are in over there. You look at every single light bulb; it's all LEDs. I mean, they are just energy conservation to the max over there. And then I come home and it's like, oh my God, I'm so happy to be back in civilization in America, where
energy abundance.
Yes, and you don't realize how amazing that life is until.
But even with energy abundance, I still would love to know, as a Floridian, what happens if all vehicles are battery electric in 10 years' time and we have to evacuate. What happens?
Highways are empty is what happens.
Oh yeah, that's fun. Where you better hope that your evacuation is like 100 miles away from the hurricane.
Listen, I evacuated ahead of Jesus Christ, 2017. What was it, Irma? And fortunately, I had a Chevy Volt with a V, so I had a generator that enabled me to escape Florida. But if I had a Chevy Bolt with a B, I would not have been able to get out of the state. Like, there are very real world implications. And it all gets back to, for commercial purposes, it has to be a more cost-effective, work-efficient vehicle. And when we're talking about vehicles getting work done, it has to do it more safely, more efficiently, more effectively. Like, there's reasons why we haven't seen, and we're probably never going to see, scaled production of Tesla's Semi. Even the e-Actros product from Daimler, that's really a Europe-oriented product that isn't going to take up in the United States in the same way. So,
because that's
EV just people get very rah about
emotional about it. Yes,
but
I mean,
it's not.
There's just it's a lot of people that are very unserious, and the only serious people in the room is Toyota and maybe Honda. But yeah, and but Toyota is in the automotive industry. Toyota is the only serious.
And you know what
people.
It is? It's a hybrid.
Yep.
Yeah.
So, what do you? I see a lot of similarities in this space, not the space call, but EVs in general, with like crypto companies. It seems like there's this like fervor for like some future technology that we don't know is definitely going to even get developed, and people sink all this money into it, and they don't really know. I mean, maybe superconductors work out, and maybe we can run cars in water or whatever, but we have no idea right now. And I see a lot of similarities with the way crypto operates.
Well, water vapor is the tailpipe exhaust from a fuel cell electric vehicle. But
we do
it's all a matter of economics, though. And at present, the cost, the capex, layer in the opex savings, layer in the end of life, layer in all that stuff. It just does not make sense in the absence of extraordinary state subsidies for fleets to electrify.
I mean, and you still have all of these EVs that have massive subsidies from the government, which just makes them more expensive for one thing, and just obscures the market in terms of like actually finding, something that could be viable and actually supported by the market. And then I'm shocked that these things still exist because frankly they're just, what's a viable EV that costs like $30,000?
You're going to
That
look at all of the Chinese EVs,
yeah,
and you're going
but
to look
that's
at the
in
structural
China.
cost advantage that they have, and then you're
I
going to
mean,
look at the
yeah,
reality
that's
that
in
if
China.
they were allowed to export with no tariffs into Europe, the U.S., those
If they were,
countries' domestic manufacturing are structurally disadvantaged and would be wiped.
Exactly.
Frankly.
Yeah, totally.
We do have Josh back in here, Josh Young. I'd love to get his thoughts on the current Middle East situation. I'm assuming that he monitors it.
So just I noted that we're going to wrap the call in 10 minutes, 15 minutes ago, but
Coward.
we can.
well.
Zachary had come up, has his hand up. Want to let them chime in, but I'm gonna really wrap it in about 10 minutes now. Josh, if you want to come up, and you're welcome to. But Zachary, go ahead.
Hey, thank you for taking my call. I have 2 Teslas. It's no problem. You can go 350 miles on one charge. So if you need to evacuate Florida, it's no big deal.
Oh, it'll be a big deal when millions of people are evacuating the state.
Well, with millions of people, you're assuming that you're going to have millions of electric vehicles.
Well, that is the world which we are told.
Without the investment of more charging, you're going to have plenty of charging. You don't get millions of cell phones overnight. Thousands of people got, and the network got built in. If millions of people got cell phones 20 years ago, there was no network to support it. So this is just complete nonsense, what you're saying, and you could not get out with your Chevy Bolt. And by the way, if you drive electric vehicles slower, like under 50 miles an hour, you're actually going to get a lot more range than your stated range. So
Also worth noting,
this is easily verifiable fact by just
I've driven an
renting a
electric
Tesla.
car for most of the last decade. I'm well aware. I'm just noting that the fantasy that it's for everyone and for the entire society is
for 5 years. I don't buy gas. Both of my cars are electric.
Zachary,
in Florida, you can put
we're
solar
not saying, Zachary, we're not saying you're going to die since you live in Florida. We're sure that you will get out fine. Okay. We're saying, okay, so don't worry. This is not a personal attack against you.
No, it's not a personal attack against me, but I'm just telling you this is easily scalable solution. I mean,
it's not. It's not.
Well,
okay. Forward,
Zachary, let me ask you this question, Zach. How much dirt?
Usage of electric vehicles is an easy solution. I
Okay.
mean, we're talking about infrastructure changes at a societal level that is like completely uprooting the world we live in today.
So Zach, Zach, I want you to do this for me, okay? If you were to take the amount of earth that had to be moved to put the batteries in your Tesla, for each Tesla you have, it's roughly the volume of your house. Now, that's twice over because you apparently have 2 Teslas. Now, I want you to do that for everybody in your neighborhood. This is the volume of earth that has to be moved to get all of the lithium out of the ground to basically make those cars, okay? Now, imagine that for your entire neighborhood. All your neighborhood, everybody has 2 cars. That means the volume of their houses are being moved twice over. Where is this being done? Exactly.
Listen,
where is this being done? And then you run into the laws of physics problem here.
Well,
which is
not
that
everywhere you need to move this much dirt. You can get a lot of lithium from oil.
Okay. I mean, oil, you stick a pipe in the ground, dude. I mean, you know.
This is easily scalable solution. This is no big deal. The subsidies are in.
It seems like the automakers who are pulling back from producing these things disagree with your sentiment.
Every box store is going to cover their parking lot when there's enough electric vehicles. It meets the demand.
Where do you think all of this electricity is going to come from?
Listen, Florida have plenty of sunshine. And by the way,
the
electrical.
So what happens when the sun isn't shining? What happens when is everybody going to charge their EVs when the sun is shining? Like, oh God, the sun is shining. I got to go drive my EV to one of these quick electric chargers.
So if you let me speak, electrical grid is severely underutilized at night. I charge my car both of my cars.
The sun shines at night. Oh, I forgot about that.
No.
So where does this power come from at night?
Well, I live in Illinois, and we have a surplus electricity from nuclear. So
okay, yes, you have a surplus in nuclear. Now, you're not going to have a surplus in nuclear when you have everybody driving an EV, because you're not building enough nuclear power plants.
Well, we can put wind, we can do a lot of stuff. And again, not everybody's gonna. If everybody goes fill up their car today, you're gonna run out of gas everywhere. So again, this is
okay,
and that's why every time you have a panic and everybody decides they need to leave Florida right away, you run out of gas. So again, this is easily scalable solution. And
not easily, but maybe scalable. I think
forward,
it's pretty hypothetical either way. If you're pro or against it, there's no way to know unless you have a magic.
Like I'm telling you, going forward, it's economics is going to drive that, whether we have the subsidies or not.
Well, that goes back to the point that the economics appear to be more unfavorable than had been promised, with reports that the repair costs are double that of internal combustion. I mean, yes, the fuel operating cost is going to be lower, generally speaking, depending on what the cost of energy is in your area for liquid fuel versus electricity. But the math problem remains now. If you're raising cost of repair, that's not what was promised. The promises were material cost reductions in repair.
I mean, I don't know what breaks. That my motor is designed for 1 million miles, and I never had a single problem.
Well, that's what your motor
says. It's not your motor that breaks. It's your actual brakes. It's your tires. It's the fact that
I have 95,000 miles on my first Tesla, and all I did was having routine maintenance to clean the brakes after 3 years. So the brakes pretty much doesn't get used unless you take it to a racetrack.
So we should definitely take your word over it versus the Hertz CEO, who has 35,000 Teslas under his purview.
Well,
yeah, it's definitely the risk of taking one anecdotal too much to heart. I mean, I had very low operating costs with my EV experiences, but that doesn't mean that the fleet isn't seeing. I don't see why Hertz would come out and make this assertion. There's nothing they stand to gain. They've really leaned in on investing in EV.
Honestly, I don't know what is would like to see the breakdown. What the hell was breaking on these cars? Are they
That's because you don't know how cars work.
Well, I have.
Oh, come on. I think it's pretty clear. You got technology that you're not able to work on yourself, so that means that you have to take it to a mechanic, unless they fix that.
I cannot work on my Prius either. And
it's pretty easy.
You could.
I do all my work because I don't want to spend $1,000 at mechanic.
I mean, honestly, nothing has ever broke.
So it's specifically
nothing ever broke down on my car except.
So the conventional maintenance stuff, the tire rotations, the the brake replacements, yada yada. That's not the issue. The issue is the collision and damage repair costs because of all the componentry, the sensors, etc., that are in the electric vehicle relative to
every new modern car. Every new modern car has the same sensors, and it costs a lot of money.
Well, clearly not.
I don't recall Hertz coming out and basically saying that their ICE vehicles are costing them a whole heck of a lot more money. So
I mean, like my buddy, somebody hit his Audi and took off the mirror, and there was $1,000 because apparently there's a bunch of sensors there.
Okay, we're talking about an Audi, all right? The first step on repairing an Audi is disassembling half a car. Everybody knows that, and you would know that too if you knew anything about cars.
Yeah, Audi is the worst car you can probably buy for that thing. I mean, if you hit a deer, your Tesla is done for then.
Total, yeah.
Well,
that's not acceptable.
I know
for a car,
guy who
really.
hit not one but 3 deers with his car, and Tesla was not done. But
you get 3 deers. That's an accomplishment.
Yep.
Sounds like FSD working perfectly.
I kid you not. Look up Sean Mitchell.
I can sum this up pretty quickly. The plural of anecdote is not data. That's one of my favorite sayings.
I agree with you on that. No, look up.
I mean, look. I already have you blocked from previous very unreasonable interactions, Zachary. I get it. You love Tesla. I'm sure you're heavily invested in the stock. Good luck. Godspeed.
Well, 50% of my money is in Tesla. The other ones is in Occidental Petroleum. That's what made me the most money in my life. But okay.
Well, either way, I want to hear what Psych has to say.
50% allocation to
thank you for letting me
an
speak,
electric.
I thought I ran concentrated portfolios.
Wow. Yeah. Look, Sick. I'm gonna let you get the last word in because I'm gonna wrap it up after you chime in, sir.
Hey, good afternoon, guys. No, like I caught the tail end of this, so like I was hoping to like hit up on a couple different subjects since Chapman's here, and but I was wondering like if you could do like a quick recap of Ford. I haven't really been following the market the last 2 weeks because I've just been like
it looks like they pulled guidance, and that's sort of
they took the page out of GM's playbook, pull guidance while the negotiations are getting wrapped up.
And the stock tanked.
They're losing
Oh my God!
A ton of money on each electric truck and car that they manufacture, and the market still hates legacy OEs, and for good reason to some extent.
So these are going to be a buy at some point, I think, though. But I don't know. I mean, maybe a trade. Who knows?
So it's maybe so pretty much it's just like a big bump because of like the strikes that's going on right now. Is essentially right from what you just said.
Well, it's also the fact that you have a structurally higher cost of labor for these unionized big three OEs who are now agreeing to another step upwards of, let's call it 25% plus some other costs. So they're going to be structurally uncompetitive. And I think eventually they continue to cede share to the Koreans, to anybody who can get labor that's not the UAW.
In Alabama or, anywhere in the South where we don't have unions and don't have these problems. And what do you know? People are really well paid. Like, you could be a steel worker in a old traditional, blast furnace plant, or you can go work at Big River Steel where you actually are productive and you get paid a bonus and you are paid more money. Oh, what do you know? Unions, not even once. I don't know.
So it's not just Ford, but like GM, they're all pulling the brake on their EV kind of transition a bit, especially as they're going through the UAW issue. So it's kind of in line with what we've been talking about, that EV, for many, view it as a complete panacea, and it's simply not. In fact, it's, if they were to accelerate it, right, they're just going to lose money more quickly. So it makes sense why they're pulling back, given the current cost structure of manufacturing these vehicles for them. It's not going to get better. It's only going to get worse, unfortunately.
Gotcha. So it's like an industry-wide issue right now.
It's specific to Big Three, really, but.
Like I would have kind of like thought like some of the or like the other automakers around the world would have the same issue, like Hyundai, or I mean like they are like really leaning in, especially the Korean business model is really similar to the Japanese, where like they are trying to push for more EVs because I don't know, apparently there is a demand in Korea just for EVs right now, but like I would have thought that they would have had the same issues too, minus they're also having their version of like, I guess like kind of like strikes the last couple of months also. I got to check whether it was the auto sector again, but or at least that's what the case would have been. No, or like is like the Asian like manufacturers like a little bit isolated because from the strikes are so very American centric.
I guess maybe I'll get the last word on this, but Ford already is inking the agreement with the UAW right now. GM is about to ink theirs. That was announced this afternoon. And while I am a fan of unions, I think the UAW is a bloated monstrosity that needs to be destroyed and broken up. Because, I wouldn't touch anything for what it's worth. I would not touch a single thing in the auto sector, period, with a 10-foot pole right now. I cannot find a single thing to be bullish on outside of certain aftermarket companies like Allison at specific prices, or GTX. But and I don't just feel pressured to say that.
Look for advantaged suppliers.
That's a whole different conversation. But as far as OEMs go, as far as actual automakers go, there's not a single thing I like in the space. Maybe BYD, but you're also counting on the health of the Chinese economy with that bet, and that's a whole fucking can of worms. But I would for sure not touch the American automakers right now either.
Gotcha. And then like while Chapman's here, I kind of want to like ask him if he saw like the numbers for Petrobras or that came out. Like I know
Oh
you guys
yeah,
were
yeah. Pretty.
earlier.
I can probably just very quickly say, I'm expecting a small beat. I was running the numbers today based on their production report and all that, and I'm expecting a small top line beat. Basically, we'll probably get a very similar quarter to last quarter. So pretty much expect a 40 to 50 cent dividend to be declared. And it's pretty much just going to be in line, I think, with expectations, which is a good thing. So yeah, but I did see the numbers. I like them. They're looking pretty good. Raising production, and I think this is really the only beginning. This is the beginning. So,
Well, I want to ask you also right now, like they raised their diesel production by like what 100 million, right?
Oh yeah, quite a bit. Yeah.
I thought like the numbers would have been like a little bit more evened out because like I thought they got the diesel specifically from the crude and how they manufactured. Like I thought the numbers would be a little bit more even and everything should have been up, but I don't see the gasoline numbers coming up that much.
Well, they seem to get, so Petrobras gets a lot of diesel out of their oil, more so than what is generally expected. There's just it's an oil that has a high amount of diesel content, basically, through distillation. Just in terms of, I think there was some slightly higher imports. Let me pull up the numbers here real quick. Where are you? I'll try to make this very quick because I do know that we have someone who wants to wrap this up. But yeah, so they basically they did pretty significantly increase their refining surplus. They're almost probably to about his numbers, like they were able to cover 94.26 of their diesel total sales through their own production, which is like a record. And a lot of this just comes down to the fact that they are basically pushing their refineries. They sort of have this bold strategy of using their existing assets to their fullest potential. And this is how they have been able to basically kind of let everyone have their cake and eat it too. They've been able to implement the fuel pricing policy while at the same time, keeping investors happy and the company, in high profitability. So yeah, that's essentially what is going on there. But as far as if what they produced in terms of gasoline sales, I mean, gasoline sales were slightly down over the quarter, but that could just be seasonality. So.
Gotcha. Well, I got some
right.
more macroeconomic questions related with that, but I'll save it for another time. I'll see you in another space.
Yes, we started this at 4. Usually I close it at 6, and we've run a bit over, but it was a good discussion. Enjoyed the conversation around EV and around Middle East, wishing the least loss of life as there could possibly be, as things seem to be escalating somewhat in Gaza. And with that, I do hope everyone has a safe weekend, and we appreciate you tuning in. Just to recap, we host these at the close every Friday. We've been doing it for a little over a year now. And then on Wednesday nights, we host calls 7 p.m. until 9 or so, depending on I think Joe, you host that on the @GMEDD handle. So yeah, we'll be back next week. Hope everybody has a nice, safe weekend, and look forward to talking to you then. So cheers, everyone.